All right, 10:45, and we've got on with us now for Tax Tip Tuesday, John Sayler from CB Accounting. And John is a little shy today, so no video from John, it looks like. Good morning, John. How are you? There. Oh,
Hey,
we have.
good morning, Jay.
There he is.
With all of these buttons and stuff like that, and this new technology, you gotta get it all figured out. And then, of course, the sad news of the passing of Toby Keith, man. Today is just not going to be a good day.
Yeah. I was sad to hear that as soon as I walked in today. I did see that old TK did pass away. So, yeah, that's unfortunate. But John, today we're talking about what's the difference between those business tax returns and those individual personal tax returns. So tell us a little bit about what's the difference there.
Okay. So basically, like there's different kinds of entities out there that people have their businesses, like cleaning business, haircutting business, landscaping business, and stuff. But they can all be set up as a different entity. Most likely, they're all set up as LLCs, which is a limited liability company. But then they can make elections to become either a partnership or an S corp or a C corporation. So there's different requirements with the businesses. So, for instance, a business tax return for a partnership and an S corp is due March 15th instead of April 15th. Okay, and the reason that's due by March 15th is because all the shareholders of that company get a K1 that actually goes to their individual tax return. So that's kind of one of the bigger differences between them is there's two different tax returns.
Sure. And there are different types of business returns then?
Yes, there are. There's what's called the partnership S corp tax return in the business. So all of the income and expenses from like a cleaning business all go under that profit and loss statement for the business. And at the end of the year, you run your numbers, and basically what you're doing is you're printing out a W-2, or I'm sorry, you're basically printing out a K-1, which is like a W-4 for the shareholders. And then that K-1 goes on to their individual personal tax return.
Sure. Why the difference between a different due date, I guess, for a business return and your personal return?
Yeah, good question. Because it basically the businesses are due a month prior because you can't file your individual tax return if you're a shareholder in a business, or if you're a partner in a partnership, you can't file it until that partnership has been filed, because that paperwork, that K-1 that comes from it, is what goes to your personal tax return.
Okay. But if an individual wants to come in and set up an appointment with you or another accountant or someone, they can still do their returns at the same time. It's not like I have to do the business on Monday and then Tuesday I've got to do the personals, right?
Yeah, pretty much. But it all depends is if their or if their business is all done, the bookkeeping, the balance sheet, all of that stuff is done, then we can finish up that tax return, print out the necessary forms we need for their individual tax return, and then we can do their individual tax return. Yep.
Sure.
Yep. And
Okay.
some of the businesses have different expenses, different write-offs, and those types of things that have to be all captured and added up prior to the end of the year.
Yeah, I imagine there's a lot of work involved in, an individual personal tax return, pretty cut and dry for many folks, but a business, that's got to be time consuming for an accountant, isn't it?
Yeah, it's a lot more work because we got to make sure, first off, we got to make sure the assets balance with the liability and the owner's equity. We got to make sure that all the business expenses that they recorded, that they're ordinary and necessary to the business in the IRS eyes, so that it is deductible. Because if they're ever audited, they can go back and the IRS can actually disallow expenses, saying that that's not ordinary or necessary for your business. So, like if you're a hairdresser, I just used this example yesterday with a hairdresser. You can't
Right.
go out and buy a four-wheeler and expect to write off the four-wheeler as a business expense, because there's just no ordinary or necessary reason to have a four-wheeler. But if you're a farmer, you probably got 2, 3 four-wheelers, but that's an ordinary necessary business for farming.
Gotcha. John, there's been a recent change to the income tax brackets, and if so, what does that mean? Let's say if I made the same amount of money as I did last year, would that mean I get a bigger refund? I'm asking for a friend, by the way.
You got too many friends, Jay. Yes, it all depends. And then, part of it too is the withholdings that they have on their tax return or on their W4, or I'm sorry, their W2, is because a lot of people may change the exemptions or may change their filing status on their W4, and they have less withheld. So then all of a sudden they're like, well, I'm getting less back. Well, if we look at compared to last year, you had $1,000 less withheld throughout the year, so that's why your tax return looks like it's $1,000 less than last year. It's not that we missed anything. You might have just changed something, or the accounting department that they're with may have did something different for them.
Mm-hmm. And let's talk, of course, we just opened up here. Was it last week that you could actually send your individual returns in, I believe? Let's talk about for those that, have done their returns in the past, maybe with somebody else. You would recommend them to bring in at least last year's return in with you so you can maybe take a look at it? Because somebody might have missed it, or a lot of people like to do their own with those free services. Is it recommended? Well, I guess that's up to the individual themselves, but you would recommend that they bring in last year so you can at least give it a look-see.
Yeah, if they're new clients with us, Dave, one of our policies is that we need to look at last year's tax return, because if they did it themselves or if a different preparer did it for them and stuff, they may have missed something, they may not have. But the other thing is if there's a carryover loss from a business, if there's carryover loss from sale of capital gain or a sale of stock or something like that, that all carries forward. Well, if they're in a different software than what we're using, it's not carrying forward on the software. So that's where we have to manually put that in from last year's tax return. Well, we don't know it if we didn't prepare their tax return prior. Some people also apply their tax refund to the next year's tax return instead of paying that first quarterly estimated payment. So there's things like that we always look back on to make sure, is there something you're missing? Did you claim 2 kids last year, then this year you're only claiming 1? Why is that? Did things change? Whatever it might be. And then we, basically we run it through our system, do the diagnostic, and we, get answers as far as, hey, they didn't do this, didn't do that type thing. So that's why we need to really look at last year's tax return, but if they're new clients to us, yep.
Okay. One final thing. I know some people might be, I guess, they might be mistaken that this home tax credit that was announced here earlier this year, that some people are thinking it's good for this year, but it's really not. It's for next year. Is that right?
Yeah, that's correct. And it's basically has to do with their property taxes. It doesn't have anything to do with individual income tax returns. We've been getting a lot of calls on it and stuff like that. And we just basically say, hey, you got to talk to your property tax department, ask them. There's a form you have to fill out and stuff. I think it's due by the end of March. But yeah, you get a reduced property credit for your property taxes. Yep.
All right. Well, John, book an appointment. How can we get a hold of CB Accounting? Of course, you got a new location, so the folks that are heading out to Century on Century Avenue, they're going in the wrong direction.
Yeah, we've had a few clients show up about 5 minutes late for their appointments because they stopped over at Century Avenue. But yes, we are at 2000 Schaefer Street in Bismarck here, still just right on the corner, right behind the Hampton Inn and Suites. If you know where the lodge and the stadium is, we're right to the west of them across the street up here by BSC. Or the best thing to do is probably just go online and book an online appointment at www.cbaccountingnd.com. Or you can always just call us at 751-1320 and we can schedule an appointment over the phone with you.
All right, John Sayler, CB Accounting Tax Tip Tuesdays. Lots of good information there, my friend. Thank you so much for your time, and we'll catch up with you again next Tuesday morning.
Thanks, Jay. You have a great afternoon.
Thank you, buddy. Talk to you soon. All right, it is 10:55. We'll take a short break, and when we come back, we'll get to your local news headlines coming up next on KFYR+.